Hi, today let us look at how the Elliott wave principle allowed us to identify a fantastic trade in crude oil. If you have been following this channel, you would see that we have been posting analysis of crude oil charts from the last 2 years. Just to recap, the first chart we posted was in May 2018. Where we postulated that crude oil can crash below $20, whereas the prevailing price was around $60. In fact, even more. The crude oil had completed a 3-wave up move and is likely to entering a protracted sell-off which will last months and years. Now this was in May 2018. Then the next analysis which we posted was in June 2019, where we said that crude oil targets rupees 2050 over the long term. Crude oil had started a big downtrend, and at that time again crude oil was ruling somewhere around 4,200. People were not believing that we were calling for crude oil prices to halve. Then in February of this year, 2nd of February 2020, we updated it further, said crude oil is on the verge of imminent crash. The Elliott wave pattern in crude oil is looking very bearish, very bearish. Again, crude oil at that time was at 3,800. 29th of February, another analysis that crude oil should fall hard. We update the wave counts in crude oil and bearish structures calling for a target below 2,000. That time it was around 3,500. At 3,500 we said crude oil will fall very, very hard. And finally, crude crashes as expected on March 2020, where crude came down pretty sharply. The targets of 1970 should be achieved very, very soon. And then finally on 18th of March, these targets were achieved. Crude oil hits the target of 1900. But even though it hit the target of 1900, we said that it was going to go further down in wave 5, wave 3, then 4 and 5 of 3. And in this video we said that crude oil will go further down. And as you know, crude oil has certainly gone further down and has reached 1,200 rupees. So that is where we are now. We have finished wave 3 of 3 to the downside. And we will now be going up in wave 4 of 3 and then wave 5 of 3. And that would complete wave 3 down. So this is a very classical example of how Elliott wave patterns allowed us to get into a trade very early, number one. And number two, it also allowed us to stay with the trend. Nobody would have forecasted a crude oil price below 1900 without using the Elliott wave principle. Therefore, the Elliott wave principle was very, very important here for us to ride the whole trend down. Otherwise, we could have taken profits here or maybe here. But we knew that this level was coming because see, in wave 3 of 3 we have got 1, 2, 3, 4 and 5. And therefore, this would be an ideal target for the wave 3 of 3. And then we also know that any bounce now will be counter trend and then wave 5 of 3 will come down again. So the importance of technicals and the importance of Elliott wave cannot be overstated. Look here. Now when we made this forecast, there was no price war on the horizon. There was no coronavirus on the horizon. Nothing. It was just the technical thing which forecasted less than half the price of this prevailing price and allowed us to ride all the way down. So that is the beauty of the Elliott wave principle, which no other form of technical analysis can tell you these kind of targets. So that is just a beautiful illustration of a fantastic trade setup which worked just as per expectations. That's all for today. Bye-bye.